Good morning, Dennis Smith reporting from the Board of Trade in Chicago. It's Monday, May 13th. Opening livestock report here. Cattle futures, hog futures not open yet. I'm recording this 15 minutes before the open. Looking for cattle futures to have a strong chance of a bounce here this week. I think the market is just not only technically oversold, but I think fundamentally out of line. The basis is out of line. And the big change that occurred last week in the beef fundamentals is the fact that beef packer processing margins are now profitable. They're very profitable. Wholesale beef has been driven up into record high territory. At the same time last week, the cash steer market driven down by 2 cents down to 126. So positive packer margins. And in the past, when they've had the incentive to get their arms around cattle, typically they've had the tendency to trip over each other, to run the bid, front run the bid, and to kind of race that cash market up. And it's due to competition in an industry that has a gross oversupply capacity versus the number of animals. Just a short-term situation, long-term still feeling like cattle prices will continue to work lower under the pressure of larger pork and poultry production. But short-term, with cash at 126, with June futures at 120.45, and with packer processing margins quite positive, kind of looking for a bullish bounce. Trading against the trend, we prefer call option strategies rather than futures outright. My opinions are my opinions alone, not the opinions of ADM Investor Services, nor are they the opinions of Archer Financial Services.